Let's talk more about what investors are liking in this market. Joining us now is David Balin, Chief Investment Officer for Citigroup Private Bank. You're still pretty friendly.
Yeah, when we're constructive on the markets, but some of the things that they're talking about today about gold, treasuries, these safe havens actually are going to turn out to be dangerous places in the market to be. Because when we get over the hump of the coronavirus and people have charged into utility stocks, they've charged into growth stocks, they've put a lot of money into these places that are, quote, safe. And we think that those are going to turn out to be places where the market is overvalued. And actually we'll see reversals. You know, if you take a look at the strength of the economy today versus 2016, when 10-year rates were as low as like 137, the fact is the market is way better today in terms of its overall strength. So this rush to safety actually is a bit of a danger for investors.
You say it makes sense. Investors are worried about the impact of the virus on earnings, manufacturing, delivery of goods in the second quarter, but there's downside, but it's not major. How do you know? You're making an assumption about that this is like SARS? Exactly correct.
And if you go back to 2003, you see this massive drop in production and a huge hit to earnings. It probably was 75% of GDP for a quarter in China. It went down very sharply, and then it came back. And when you look at that as the event, you see that the market then performed very well for the next 12 months. So right now, there are two things that are really unusual. When we look at what the private banks' Asian investors have been doing, is they've been taking positions in the Asian markets, in equities, and actually putting money to work. And you've seen a snap back to normal levels in China. When we look a year from now, I think you're going to actually see that as a very attractive market from this point forward, because because of the fact that earnings will continue to rise.
In general, you don't think markets are overextended? I mean, there's got to be some pockets. Tesla, Virgin Galactic.
Right. There are definitely some growth stocks that are not that have left orbit in terms of relative valuations. And that's true of a lot of growth stocks which are deemed safe.
Right.
What we're looking at, if you want to take a look at what people should own, right? There's going to be a rotation from growth to value after this is over. There's going to be benefits to actually owning dividends that are not utilities. There are places where people should go.
So you think
the underlying strength of the economy is there.
Dividend. Someone else said that earlier.
Yeah,
but how worried would you be? And we talked about this in the last hour, just about how overweight or how much the FANG stocks are basically weighting the S&P on any given day.
When we say weighting them, we are definitely worried about the relative value of the S&P given the earnings growth that's going to come. The S&P is fully priced right now. The discount of emerging markets and developed markets to the U.S. is at an all-time high, which tells you that the U.S. is viewed as a safe market, a place to go when things are in distress. So you want to own a lot more of those other things where earnings growth is going to continue in Europe, in Japan.
Wait a second. Are you saying, I mean, when you're saying that there's a rush to safe havens and that the U.S. stock market is one of those havens?
That's right.
Because this is one of the ones that's going to be unwound as
the FANG stocks and the valuations of those relative to others is a risk for investors. They are, they have a lot of momentum built into them, and you're discounting earnings that are 3 and 4 years away. And so that's really what's taking place psychologically. And so I do think that there's real value in the market, but you have to actually seek it and actually rotate your portfolios to it. And one of those being dividends. And so what's interesting is when you look at how a global investor thinks, and an Asian investor, they're buying their local markets because of the relative value of those markets in spite of the coronavirus. That's something that a U.S. investor can do as well. Same is true for dividend stocks in the United States. Same is true for dividend stocks in Europe. These are places where there is relative value, and assuming that we continue to have EPS growth, which we think we will, things that you should own, in portfolios.
When you have a meeting with all your people at Citi Private Bank, you talk. I mean, obviously, you talk China, you talk coronavirus, you talk the election.
When we do talk about the election impact and the difference between the psychological impact, what people anticipate, and you've done that on the show already this morning, what's likely to happen, in other words, the relative ability to change policy depends obviously on the Congress, Senate, as well as who wins the election. So there's a tendency to exaggerate and to have people sort of presume that there'll be radical changes in policy, and that I think is unlikely. But the market will react much more violently depending on how that goes.
So we got, I was just looking around. We have Saturday is Nevada, and Bernie hasn't done a lot in Nevada. Buttigieg is still ahead in terms of
the delegates that have been won to this
Super
point.
Tuesday is a week from Tuesday.
It's going to be a big deal.
But it's only a week from Tuesday.
I know.
And it looks like Bernie's going to win Texas and California, which are both the two prizes.
We'll see.
But because Buttigieg, Bloomberg, and Klobuchar and the other moderates, if none of them leave, that's why Bloomberg circulated that dire scenario that if there's that many moderates splitting the vote, that it gives Bernie almost an insurmountable lead. So
But there's also a story out today that Bloomberg, his campaign has been reaching out to all of the superdelegates and everyone to try and line up support for a second vote. They can't vote on the first vote, but if there's not a clear majority after the first vote, they can vote on the second vote.
It's going to be ugly if they, and Trump keeps saying it, if they take it away again, it's going to be ugly. But if he is the nominee, and there's a chance he gets elected, I think you should look at some of your positions.
Why don't we take a look at what the probabilities of these are? So we went back and looked at 100 years of data, right? And given where this economy is and how strong it is, the probability of an election, of the re-election of the president is, well above 75% today, regardless of who the Democratic candidate is. If the Democratic candidate is a moderate, there's a whole variety of other scenarios you can look at. Okay. So the question is whether the market's going to react rationally to that or not, right? Because that's the baseline of where things are today, given the growth rate of the country, and things like that.
I almost played some for you on my phone.
I know that you like this Marty Bound. We're going to have to move on next year. So it's 2020.
That was a real loss. I know. That was a real loss. I'm worried we're going to start losing a lot of the wrinkly rockers that I grew up with, and I don't look forward to that. I already lost Bowie and others, but
that's right.
There's some big ones that are getting up there. Anyway, thanks,
Balin.
So
very, very pleasure to be here, and I think we'll see this rotation take place.